What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did see a continuation of that selling that started yesterday. Where does the stock market go from here? First up, we'll take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today we see SPY dropping about 0.75% and closing right on top of that support level that I gave you last night around $412. We're not out of the woods just yet because we do need to see a price action confirmation bounce off of the support level. The next support level lower, if we do break down below 412, is going to be right around $408. If we break below that level, we're looking for support at the 20 simple moving average, which is going to be right around $405. Remember, we're still in a bull market. All of the moving averages are still stacked to the bull side, and the price action is still holding up above a positive sloping 20 simple moving average. So I always say don't bother trying to short a bull market because it's always possible that we reverse from the selling and go right back to all-time highs. So watch the critical support levels below, and don't forget that we do have the gap to fill around 400 if we do break down below the 20 simple moving average. But right now, I'm not favoring that gap to get filled until we see a larger stock market correction, which I do think we have another leg higher in this market before we see a stock market correction. So to the upside, our resistance is going to be that previous all-time high around 417, and a break and close over that means we could be going up to 420. Above 420, we do have another price target up here, which is all the way up here at 426. Remember, we're in a bull market, so we still want to look for upside price targets. Normally in a bull market, you're looking for buy the dip opportunities, and you know that your risk is defined at the support levels that you're buying off of. So if the price action bounces off of any of these levels, you want to try to trade the market long in a bull market and go to higher prices, knowing that your risk is on a close below support, and that's where you should cut your losses in case we continue to go lower. So don't be afraid to be a bull in a bull market. Trade responsibly and know your risk and control your position sizes right now, and the higher we go, raise more cash. That way you're prepared for any scenario. You don't have to sit on the sidelines in a bull market just because we're going to all-time highs. In a bull market, we're going to continue to see all-time highs, and now we're finally starting to see a really nice pullback. Remember, these pullbacks can typically last 2 to 3 days, and today marks day number 2. So we could see a continuation of this selling going into tomorrow, and we would be looking to find support somewhere around this $408 level. On the NASDAQ 100 QQQ ETF, we also dropped about 0.75% today, and we did close above that 13 EMA, which is where we found support right around $334. We did close below the 5 EMA, and we still have a gap to fill down here at 332.50. We also have the 20 simple moving average currently trading around 329 with a support level right around 330. So we still have a nice bull trend on the NASDAQ 100, and we still have price action holding up above a positive sloping 20 simple moving average. So watch critical support at 334, 332.50, 330, and the 20 simple moving average at 329. The gap fill is down here around 325, but again, we're not likely going to fill that gap until we see a stock market correction. Upside price targets and resistance levels are going to be 342 and $350. On the Dow Jones, we also dropped about 0.75% today. I'm seeing a theme here, and we did close below the 5 EMA. We did find support right on top of that previous all-time high level around 337. Upside resistance levels are going to be the previous all-time high around 341 and the next price target at 347. Downside support is going to be 337 and the 20 simple moving average right around 334. The gap fill is somewhere around 331. Again, don't expect these gaps to get filled until we reach the next price target and see a correction. On the Russell 2000, we had the worst day of all, going down over 2% and closing back below the 50 EMA. Remember, price action below the 50 EMA in a bull market is not a good sign, so it does look like the Russell 2000 is going into a somewhat of a bear market here, and we're slowly but surely starting to see these moving averages stack to the bear side. If they do start crossing below the 50 EMA, that'll be a full bear trend with bearish price action. You can see the price action is closing below all of the moving averages, so the bears do have control of the Russell 2000, and they're gonna have resistance levels to short off of right around 220. Resistance above is gonna be 220, 221, and then all the way up here around 224. Downside support is now 215, 210, and 205. On the ARKK ETF, we dropped 1.20% today, closing back below all of the moving averages now for 2 days in a row. We're developing a bear trend, and all of the moving averages are slowly building up some bearish energy, and it does look like ARKK wants to come down and close the gap at 115. After the gap close, we have one more support level at the support trend line right around 112. Below the support trend line, we're coming back to 105. Upside resistance is going to be 120 and the 50 EMA right around 126. On the VIX, which is our fear indicator, we can see indication that fear is slowly starting to creep back into this market, with the VIX going up over 8% today. We did close back above that resistance level at 18.2, and we're back above the 20 simple moving average, but we're still trading below the 50 EMA and the resistance level at 20. Remember, the VIX spiking like this could be an early indication that we're going to see an escalation in the selling. However, we're still below that critical level of 20, so we need to watch the VIX very closely. If the VIX starts spiking up above 20, that could mean that we're going to see drastic selling and we could see a stock market correction sooner rather than later. But right now with the VIX below 20, this is just a pullback and it's completely normal to see the VIX spike while we're getting a pullback. On gold, we did close above our price target today at $17.76, which means we could be well on our way to the next price target at $18.26. Downside support levels are going to be $17.76 and the 50 EMA right around $17.61. Silver's pretty flat on the day, but still closing over the 5 EMA and holding up above the 50 EMA. We don't have a bull trend on silver just yet, but it does look like silver is trying to get up to the next price target at $26.50. Downside support is going to be right around the 50 EMA at $25.60. On Bitcoin, we're currently up a little over 1.5% today, and Bitcoin bulls are currently still holding up above that 50 EMA support level. That's right around $55,750, and that is going to be the critical support level that the bulls need to continue to close over. As long as Bitcoin can stay over the 50 EMA, it can still maintain a bullish trend and it can go back up to all-time highs. Upside resistance is still going to be 59,000 and 62,000, but we do have downside support just below at 55,700 and 51,000. Remember, if the price action on Bitcoin closes below 55,000, we're likely gonna test these support levels at 51,000 and 45,000. If Bitcoin breaks below 45,000, we could see that waterfall wave of selling and get back to $30,000 very quickly. On Amazon stock, we went down a little over 1.10% today and did close back below the 5 EMA. This resistance trend line continues to give Amazon a problem, and even though it did try to break out from this level, it did find resistance and it's back within the wedge. But also note that Amazon is in a full bull trend with all of the moving averages stacked to the bull side, and it really could just be cooling off after this monster bullish rally. So look for Amazon to try to break back out above about 33.73 and retest that resistance level at 34.42, with the next price target above there being 34.82. Downside support is going to be 32.97 and the 20 simple moving average, which is right around 32.38. On Tesla, we went up about 0.61% today and did close back above the 50 EMA for another day in a row. So we see Tesla's price action holding up above the 50 while the moving averages slowly try to stack to the bull side. Tesla will have support right here where it closed right around $718, and it will find resistance above right around $762. If Tesla can break out above $762 and get a closing price above that level, it could go back up into the 800s. Downside support is going to be right around the 50 EMA, right around $700, and the 20 simple moving average at 682. On Apple stock, we dropped about 1.28% today and closed below support and below the 5 EMA. We'll now have resistance at 134 and the next price target above right around 137. Downside support is going to be the 13 EMA at 131 and this next support level right around 130 with the gap close at 128. You could see that Apple almost had the 20 simple moving average cross above the 50 EMA today, but the price action went down too much for that crossover to occur, but it does look like it should occur tomorrow. So Apple is very close to being in a full bull trend, which means it will have the benefit of a bullish trend to push the price action higher. So this could be a buy the dip opportunity in Apple as it continues to run up towards its next price target around 137. On the financial sector, we saw a lot of selling today going down 1.87%, and it looks like it did hold up above that support right around that 20 simple moving average. The trend is still fully bullish, but the price action is testing a critical support level. On the industrial sector, we dropped about 1.10% today and did bounce off that 20 simple moving average intraday. The trend is still fully bullish, but the price action needs to hold up above this critical support level. On the healthcare sector, we went up 0.39% today, closing at brand new all-time highs with really strong price action and a really strong bullish trend. On the energy sector, we dropped about 2.65% today and did get a price action close below the 50 EMA. If the energy sector continues to close below the 50 EMA, it could develop a bearish trend and go into a bear market. It needs to try to bounce off support and get back above that 20 simple moving average. So going back to the S&P 500, we definitely did see some selling across the board today, with the only sector in the green being the healthcare sector closing at all-time highs. We still see strong bullish trends in the sectors, and this still could just be that 2 or 3 day pullback before we go back to all-time highs. So watch the VIX very closely, because the VIX will tell us if the fear starts escalating and we see an increase in selling volume. That will be an indication that we're likely in a stock market correction and not just a pullback before we go higher. So remember that 2 to 3 day pullback rule and watch the critical support levels I gave you very closely. Also remember, on the Stocks Channel Discord, I give intraday updates to you on the market to help you stay on the right side of the trade, and I bring new trade ideas to you weekly. If you're interested in the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. Next up is our trade idea Shopify, and we did see Shopify closing that gap today and bouncing off that support level right around 1111. That will be the critical support level that I want you to pay attention to, because if Shopify does start closing below 1100, it could be going lower. We do have earnings coming up, and this is a nice pullback for a potential run into our next price targets. We are closing below all of the moving averages, and the moving averages are still chopping around and going sideways. But if the price action could get back above the 50 EMA at 1176, we could go back through the rest of these price targets, especially if we get a good earnings report for Shopify. So remember that risk on Shopify trade is on a close below 1100, and the bullish price action we want to see is a close above 1175. Price targets above are still going to be 1203 and 1260, and we still need to get back above that 50 EMA before we could likely go back into a bull trend. So we'll continue to cover Shopify whether we get stopped out below support or we can start getting back into a bull rally from here. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.